Hi everyone, Buyers Agent Jay Pace here for the Providence Property Group market update for the month that was February 2025. For those of you new to the channel, we are a national buyers agency with offices in Sydney, Melbourne, Brisbane, Adelaide and Perth. We believe that there's always an opportunity somewhere. We help you to be a player and not a spectator in your wealth journey, focusing on quality properties over quantity, operating through 3 decades. Our experience will ensure no sleepless nights worrying about property markets. On this channel, we talk about all things property, but most importantly, I read the news so you don't have to and separate the facts from the fiction. Let's get into it. Okay, so many of you may not know this, but until 2012, I was actually in stockbroking for almost 10 years. But I turned away from the dark side and I moved to property. And a debate that I would often be drawn into is what's the best investment property? Gold, shares, or property? What's the best investment? When it comes to investing, your options are pretty boundless. I mean, you've got crypto, you've got savings, commodities, commercial properties, so many more. But the three big investment options remain residential property, shares, and gold. So, how have they stacked over the last 20 years? Let's go into that a little bit more. So, shares are the go-to for beginners. They're the first thing I did. They're affordable to start with, and they're simple to trade. They thrive during economic booms and political calm, but watch out, prices can plummet fast during slowdowns, instability, and global crises. And I definitely saw that when I was in stockbroking. Gold flips the script because it shines in turbulent times, surging when uncertainty hits. But when confidence returns to the market, gold often starts to soften, it stalls, or it dips as investors chase other more lucrative opportunities. With over 3 million investors owning properties across the total value of Australia now tipping $3 trillion, residential property reigns supreme. But how does it perform compared to shares and gold over the past 2 decades? Let's have a look. So if we look at this this chart here over the last 20 years, shares, which you can see are the blue line, that's the indexed share price, and they've soared before the 2008 GFC, then they crashed. They since have ridden a bit of a roller coaster, slumping during COVID, recovering, and then dipping again. Gold, which you can see is the yellow line there, that's indexed gold. Gold climbed during the GFC and it spiked again with COVID, but stagnated in between. Recently, economic kind of jitters, I guess, and conflicts in places like the Ukraine and other areas in Gaza, they've definitely sent gold prices soaring again. Housing. It is definitely the steady climber. You can see that green line. Apart from a minor dip kind of in 2012, property values have risen consistently. There's no wild swings here. So why is housing the winner? Well, shares and gold have had their moments of glory and gloom, but housing stands out as a less volatile and more dependable investment. Plus, there's a bonus. While gold only pays off when prices rise, housing delivers rent and shares also offer dividends. They've also got depreciation for property and franked dividends for shares. So similar in that respect. Around 2 to 6% returns, regardless kind of price trends. Over 20 years, shares have lagged in price growth. Gold shines the brightest, but housing strikes the balance. Reliable gains plus steady income. For sustainability and returns, in my obvious, unbiased opinion, property is pretty tough to beat. All right, now let's jump into the speed check for the month. With a rolling 12-month movement, I've done the numbers from the 28th of February 2024 to the 28th of February 2025. So let's have a look here. Still hot on the trail is Perth, $115,000 increase. Still market dropping. I mean, the market overall has slowed down. It's still increasing in value, but in regards to the speed in which it's going up is starting to slow down. I'm not too worried about this because I see the speed go up and down, up and down, up and down all the time, but it has been slowing down consecutively now for about 6 months. $115,000 increase with Perth, $2,200 per week. Adelaide has now overtaken Brisbane in regards to the speed check, and now we are at $98,000 for the last 12 months, or $1,900 a week. Brisbane just dipping below Adelaide, $87,000 for the year, or $1,700 per week. Sydney still slowing down, $13,000 for the last 12 months, $2,500 per week, and Melbourne continuing to drop back at $24,000 loss for the past 12 months, or losing $500 per week. Okay, let's look at the Hedonic Home Value Index. So this data comes out once every single month, and it's kind of my go-to to figure out what's happening with the markets. We can see there, and for some reason I tag the quarterly and not the monthly, but basically we can see for the monthly, Adelaide and Perth were both tie at 0.3% increase. Melbourne actually had the highest increase with Hobart at 0.4%, so both of them were tied at 0.4. Second place tie, Adelaide and Perth at 0.3. And then bringing Sydney into 0.3 as well. And then we had 2.2s in Canberra and Brisbane. I haven't seen it do this for quite some time. Again, it's only 1 month, but it is interesting to see. Let's look at the annual performance. We can see there 14.3% for Perth. Still the highest performer, followed by Adelaide at 11.9%, and then Brisbane at 9.7%. Although trending higher through the last summer months, the national flow of freshly advertised properties has continued to hold below the levels typically seen this time of year. Again, if you are a person that I am talking to, or you're watching this video and you are thinking, I'm going to wait till more product comes on the market before me and my partner or I decide to jump in, stop waiting. It's not coming, okay? And if it does come and we got this massive wave of properties and prices started to drop, don't kid yourself, you would not buy anyway because you'd be freaking out that the market is crashing. So there isn't a perfect time. Just get in if you want to buy a property. Don't make up excuses. Compared to last year, total listing levels are up 2%, but remain 10.5% below the previous 5-year average. New listing activities across the capitals and the rest of state regions was relatively mild over the 4 weeks to the 2nd of February relative to last year. Canberra was actually the only capital city to see an increase compared to 2024, up 0.2%, so nothing amazing. Adelaide is down 13.4%, Hobart down 10%, and that saw new listing levels more than minus 10% below this time last year as well. So quite interesting. We look now at a recent up kind of shoot in the median to high density approvals. So we're starting to see units, townhouses, etc. starting to go up. The monthly count is now above the decade average by about 3.2%, which is good. That's the first time it's breached that in quite some time. It's the first time it's breached it since December 2022. But housing approvals are currently still 5.9% below the 10-year average. So houses seem like they're taking a little bit longer to get approved than units. Cash flow, again, very similar to what it was last month. 3.5% is still the average cash flow that we're receiving on the combined capital cities there. Today, let's look at some recent property purchases that we've done over the past couple months. And starting with Sydney, my superstar Joey got this fantastic house for some happy owner-occupiers in one of Sydney's northern suburbs. It's a fully renovated 5-bedroom house sitting on a huge 577 square meter block. The internals are beautiful, lots of natural light. I love the hardwood floors, like the ceilings. You've got ceiling fans, ducted air conditioning. You've got your down lights. It's just beautiful, and I love the interior. It's very bright, lots of whites. The kitchen is actually quite stunning. I was pretty jealous of this kitchen. It's got a load of counter space. 2 massive fridge recesses. You can see them both there, and those are normal fridges too. So I don't know how many people are going to live in this home, but holy moly. It also has access to an outdoor benchtop area. So you can see just out on the balcony, there's this huge sliding window. And then also you've got a mini bar fridge in the bottom there as well. So this is a massive, massive kitchen. It's probably one of the biggest selling points for me about this whole house. The outdoor area is large, and it's a bit of a blank canvas, though. I was surprised. I think they wasted a lot of their money on the kitchen. You can see the extension there and what they've done. They've done a great job, But I really like this because they could really turn the backyard into anything that they wanted. They could put a pool in there. I would probably get rid of that tree sooner or later that's right behind. I think it's only going to wreak havoc with your gutters. But yeah, they could build a pergola. They could put a pool. They could put a barbecue pit, outdoor entertainment area. There's just so much that you could do with this. I really do like it. Let's have a quick look. Distance from the CBD, it's 13 kilometres north of Sydney CBD. We bought it for $2,350,000. The rental estimate is about $1,200 per week or 2.5%. Again, this is why you don't spend this much on an investment property typically, unless you are knocking it down or adding significant value. Majority of the time we're buying properties like this, it is for owner-occupiers. So they're not worried about the rental yield because it just doesn't make sense. It's probably another reason why the trend of new owner-occupiers in Sydney is dropping and they're becoming rent-vestors, buying in other states where they can afford, that's going to give them a much better income. Why do we love this purchase? There's great bones in this property from a solid built home. It's got fresh life breathed back into it. You saw the internals, they're gorgeous, well executed internal renovation with no expense spared. Perfect for a family to call it their home. Really love this. Let's go to Melbourne now. And I was speaking to one of my guys down there, Benjamin, and Ben was showing me some recent off-market properties that we're looking at, because we do look at quite a few off-markets. And he was showing me one the other day that sold back in 2021 for $1.7 million. I'm just trying to remember. $1.7 million was the sale back in 2021, and the agent had just sent him a price guide of between 1.2 and 1.3 million dollars. So we're seeing some heavily discounted properties in Melbourne at the moment, and I know people get scared, and when things look shaky, they're like, oh, I don't want to buy, I just want to wait till things recover. But then those are the same people that when things recover and they get too strong, they go, oh no, the market's a little bit too strong at the moment, I think it's too hot, I'm going to wait. There's no perfect time, but if I had to choose one to buy, it would be when a market has dropped or is dropping and I've got solid fundamentals to show me that this property should definitely go up sooner rather than later. So this property, the client's very lucky to get this one. It's 582 square meters. You can actually see from the top down image here, I'm going to move my head. You can see that there's two dwellings. So it's not just one dwelling, it's two dwellings on the one block. So the great thing about this is you've got dual living offering multiple rental incomes, and that's a huge bonus for this client here. Also the location. This is a water adjacent property. I'm not going to call it coastal because, I don't know, can you call that area right in the middle of Victoria that kind of goes down? Can you call that coastal? I don't know. I always thought it was on the sides. But this is a water adjacent property. It's 8 kilometres from Melbourne CBD. It's in a nice quiet street, conveniently located near shops, parks, transport. Great outlook. You can see there. Like, this is a great spot, and you can see Melbourne CBD right across the pond there. So it's quite nice. The internals have been fully renovated for both dwellings that occupy the land. There's a 3-bedroom section that can be rented as a 2-bedroom with a 1-bedroom in it, or there's also a second dwelling that features 2 bedrooms. So there's actually the potential here, from what Ben was telling me, that you could rent this out to 3 different parties, which I think is really, really awesome. This is the second dwelling space, and this is the second kitchen area, which is also quite nicely done the way that they've done it. 8 kilometres southeast of Melbourne CBD. We bought it for $1,880,000, which I think is great value for the land component, plus the significant rental yield. Now, I'm telling you the rental estimate right now, and Ben gave me a range that could go a bit higher, but I just thought I'd kind of pick the middle. So let's say it's $1,500 per week. That's a 4.1% rental yield. Now that's based on a 0% deposit. If you had a 10 or 20% deposit that you put down on this property that was cash, not full equity release, straight away this thing's going into the 5+% rental yield component. And with interest rates starting to drop now below 6%, this is a very attractive looking purchase that for the long term, the hold is not going to cost you a lot, and you will certainly benefit for the imminent growth that we're going to see in Melbourne over the next 5 odd years. Why do we love this purchase? Good land size in a great pocket of that particular suburb that has 3 individual lettable spaces that will provide well above average gross rental yield. For this purchase price in Melbourne, we just can't beat it. It's great. Let's look at Perth. This is a huge townhouse that sits on 273 square meters of land. It's quite insane because I look at this and then I also remember, because I'm based in Sydney and a lot of our team is here with our headquarters in Barangaroo, I would go to places now that I do not consider close. They're still lovely areas, but I'll go to places like your Box Hills, your Rouse Hill areas, etc. And I'll see brand new builds on 250 square meter blocks of houses. And these houses are selling for $1.2 million. Now, this is a huge townhouse and it sits on 273 square meters of land. It's 500 meters to the shops and it's less than 3 kilometers to a really nice beach. I've been there. It's actually quite a lovely area. So this is north. By 33 kilometres from Perth CBD. It is in a boutique estate of only 6 modern townhouses. They were completed in 2006, so they're still quite young. You can see it hasn't been renovated and still the internals still look pretty good. It has the essential ingredient that every semi-detached dwelling that I like has, which is sunlight. So I like that. You can see the outdoor area is quite large and the distance from the boundary walls on both sides actually is quite large. It's got ducted air conditioning, high ceilings, tiled living and dining spaces. I hate carpet, so I love when I see this. Distance to the CBD, like I said, is 33 kilometres west of Perth. The purchase price was $590,000. Just great value. $640 per week, or about 5.14% rental yield. Again, you throw 10, 20% on this, this gets closer to 6% rental yield. You're getting close to being positively geared. Why do we love this purchase? It's a boutique estate, solid build, large footprint, 500 metres to shops, 3 Ks to the beach, 15-minute walk to amenities, including major shopping centres, giving it a decent walkability score as well. So our team in Brisbane secured this young and tidy 2-story, 4-bedroom home on a 320 square metre block in a quiet street 25 kilometres north of Brisbane CBD. I think this was Christian that bought this for my client. Great job. Again, a bit of a different looking facade. Post-modern, I think would be the best way to describe it. I'm not crazy about the purple, but here are the things, guys. When you see a property, if I would not buy this because I just didn't like the purple or because the facade was a little bit different. Some people might love this straight away, but what I'm saying is all those things that are superficial that you could change, you could paint, you could do stuff like that. Those are the things that you look past because you're going up against owner-occupiers, which is 70% of the market usually, and they're usually quite picky and they're always looking for their dream unicorn property. This is where you need to compromise and take advantage, okay? High-pitched ceilings, ducted aircon, downlights, tiled living and dining space, open living space areas. Like this is a really beautiful internal property. I love it. Again, large bedrooms, lots of natural light. You've got the ducted aircon in there. You've got like the outdoor area or the little offshoot to the outside area there. The furniture all looks like, in my opinion, including the television set, that this was taken from an old hotel. So I don't know who staged this or who lives in this, but pretty weird. The outdoor area is lovely though. So you've got like an undercover area with shutters that you can see on the right-hand side there. You've also got another little outdoor area where I think you could probably hang your clothes. You've got the extension on the house as well to one of the bedrooms. They've got this really, funky little bungalow that they've done there. And they've got this small pool, which looks like it's probably pretty easy to maintain because it's not very large. Just beautiful. I really like it. I think it's quite beautiful for what it is. This is 25 kilometers north of Brisbane CBD. We bought it for $968,000, which in my opinion is a steal. I think it's just great pricing for that. $750 per week, about a 4.02% rental yield, which is again a decent rental yield for this type of product. The average house price in Brisbane is just under $1 million. So to get something like this, I think makes a lot of sense. Why do we love this purchase? It's a great quiet location. It's close to transport and major shopping centres, parks, schools, childcare, and employment generators providing tens of thousands of jobs locally. The hospital's within 20 minutes, very large home. So the internals of the home itself is 237 square meters. So it's a big house on a decent sized block. So really happy with this. Great job again, Christian. Great purchase. Remember, guys, we can't help you until you commit. And once you commit, we won't let you fail. We bring two things together here: your desire to build wealth and our 18 years of experience buying the best properties in Australia. For more than 3 decades, Providence have helped Australians open a life of opportunity through real estate, giving them the future that they want. We buy unique, quality assets in areas where demand outpaces supply. We focus on property that appeals to a much larger market of owner-occupiers, 70% versus the 30% of investors. And we buy in the right capital cities at the right time, guided by economic property cycles. And you'll know this because if you watch our videos over the past 5+ years that we've been doing the videos, you will see that we have changed the areas that we're interested in buying in, from Sydney to Brisbane to Perth, now going to Melbourne. And that's following the property cycle. We buy the property which is uniquely suited to your situation, which will act as a springboard to your next wealth building stage. So this is how top performing investors build wealth, and this is how we want to do it with you. Thank you for your time, and I'll see you next month.